Good morning, Thursday, October 2nd. Hope your October is off to a good start. Let's take a quick look at some of the economics. Government shutdown is here. So far, not a big deal, at least for the stock market. But for how long will it last? The longer it goes, the greater the impact it may have on the stock market. Just this is not all of the economic news, but just a real quick recap of some of the things that we do have. Purchasing Managers Index, worse than expected. Job openings, good. Consumer confidence, worse than expected. ADP employment, much worse than expected. Today's jobless claims are delayed. Not sure why. But both jobless claims and factory orders are delayed this morning. Tomorrow we'll get more detailed, more heavy employment data, so stay tuned. Markets are up. We'll of course look closer at that, and the Fed still should have plenty of room, plenty of justification to cut rates again, another quarter of a point. The futures market has built in, last time I looked, it was about a 99% probability of a rate cut based on futures that relate to the Fed. All right. So far the stock markets, at least pre-market on the futures, have given us another all-time high. Again, this really isn't too surprising. We have enough money for people to buy. We have reasonable expectation that the markets will keep humming along, that the economy will keep humming along. But as we commented, there's sufficient justification for the Fed to cut rates again. Now this is pre-market, and so of course could change even in the next half hour before the markets actually open. But even if it does, we're still more likely to be bullish through the rest of the year than we are to have a big pullback. Anything could happen. It's all dependent on future news. But if things stay status quo, we should be higher than we are now by the end of the year. All right. Good luck out there. Talk to you tomorrow.